What's up everyone, it's Karthik with MoneyVest. So in this video we are going to be talking about my worst stock pick ever. That is going to be PayPal, and PayPal reported their earnings for the second quarter fiscal year 2024. I did a video 11 days ago going over my worst ever stock pick, my biggest loss in terms of percentages and in terms of dollar amounts. It was PayPal, and I was down, I'm still down actually almost 50% or a little bit closer to $24,000, but PayPal just reported their numbers pre-market today, and it is already on the move, so it's pushing up a little bit closer to 5% pre-market. So we've also included for pre-market and after hours quotes and prices and changes on our platform. We're working on a lot of really amazing, cool new features to be added on over time. We're working with a lot of data providers. So if you want to get access to this platform, link's going to be down below with a 51% discount available for a couple more days. You can lock that pricing in unless, of course, you cancel. But this right here is the current PayPal, trading at just over $61.70 after beating expectations, topping revenue, topping EPS, and also beating guidance and raising guidance for the future. So it may not be the worst stock pick after all. We'll find out very soon over the next several quarters and several months here as PayPal continues to report their numbers. But this right here, of course, is the daily spike as we're seeing from lows of about $58, $59 to trading all the way up to $62, starting to roll back just a little bit, but very, very nice move to the upside. So this right here were the numbers. The key message from Alex Chris is we've got a very strong second quarter numbers to report. First half results also coming in with strong execution, branded checkout, Braintree, Venmo, everything contributing to the higher growth rates for PayPal since 2021 and driving consumer momentum with monthly active account growth across PayPal and Venmo. And that's actually one of the most important pieces of PayPal's business is the growth in the monthly active accounts. That was actually one of the things that really resulted in PayPal selling off, is because we saw declines across the board for the active accounts because PayPal's focus shifted more towards engagement rather than growth in active accounts. But now we're starting to see that reacceleration because active accounts are growing and engagement is growing at the same time. That is exactly what we want to see. That's going to lead to more users, more engagement, thereby leading to more fees and more revenue for the company, thereby leading to more profits and more cash flows for the business as well. Also raising fiscal year 24 guidance for earnings per share, total payment volumes, free cash flow, and share repurchases as well. So this right here were the numbers coming in at total payment volumes of just over $416 billion. That's up close to 11% on a year-over-year basis. And then, of course, revenue coming in at just over $7.8 billion. The expectations were, I believe, just over $7.8 billion. We got 8 to 9% growth on a year-over-year basis, and earnings per share non-GAAP sitting at just over $1.19. Expectations were $1. That's a 19% above the consensus, huge beat, and a 36% increase on a year-over-year basis, and free cash flow sitting at just over $1.3 billion for the company as well. This right here is active accounts sitting at 429 million. That's going to be on the actual cumulative number, and that is up about 0.4% or 2 million added sequentially, driven by lower churn versus fiscal year 23, and includes growth in PayPal merchant and consumer accounts. Monthly active accounts sitting at 222 million. That's up 3% year over year. Number of payment transactions, 6,580, and transactions per active account. This is the engagement section of PayPal's ecosystem, just trading at just under 61 here in terms of transaction per active account here, and that's up 11% year over year. So this right here were the actual key numbers. Revenue just over $7.8 billion, transaction margins of $3.6 billion, year-over-year growth of 8% for the company, and non-GAAP operating income of $1.4 billion, 24% growth on a year-over-year basis. And then we've got non-GAAP EPS, as I mentioned earlier, at $1.19, up 36% on a year-over-year basis. Now, when it comes to the guidance for the entire fiscal year 2024, the company is now expecting the transaction margins to be in the low to mid single digit growth, non-GAAP earnings per share to be low to mid teens growth here. So again, 12, 13, 14% in and around those levels. That's again, very respectable growth from PayPal, and GAAP EPS approximately 388 to 398 prior to 365. So they're actually raising their guidance for GAAP earnings per share, and free cash flow is expected to be around $6 billion for the company now, and the prior expectations were about $5 billion, and share repurchases also of $6 billion. Prior was around $5 billion. So here we have a company raising expectations, first of all, beating revenue and earnings per share, raising expectations for earnings per share, raising expectations for free cash flows, and also raising expectations for share buybacks. And that's why Wall Street, of course, is rewarding the stock a little bit, close to 5% in the green. And for the third quarter 2024, we're expecting a non-GAAP EPS growth of about a high single-digit growth, and GAAP EPS about 96 to 98 cents per share for the business. Now, this is actually going to be the quite interesting piece where you'll notice that the actual increase in active accounts has accelerated once again. So from third quarter 21, you'll notice that we went from 416 to 426, 429, 429, 432, 435, and this is when we actually peaked in the active accounts, and this is also the time when the stock price somewhat peaked. If you come over to the TradingView chart, you'll notice PayPal essentially peaked during the end of 2022, beginning of 23, I believe, might even be earlier. So this right here is August of 21. So about a year earlier here, August of 21, when it peaked at around $306. And from those levels, it's still down almost 80%. But this is also due to the overvaluation for the company, and as we were getting started with a potential bear market, because 2022 we did witness a significant bear market for the S&P 500 and the Nasdaq as well, and since then it has just never been able to recover all the way back up to that level. So 433 we started declining in the first quarter 23, then 431, 428, 426, and then again we took over, Alex Chris took over, from Dan Schulman, and now we're starting to see that reacceleration back up. So it would really went like this, plateaued, came back down, and now we're starting to move back higher, which is a good thing to see. From 427, we're back up to 429 million in active accounts for PayPal. So we're starting to see that reacceleration back to the upside, and we want to see that continue. And transaction per active account is also from 44.2 to a little bit over 60, almost 61 transactions per active account. So now both of them are actually moving in the right direction. That's exactly what we want to also see. Now, this right here was a report on Motley Fool from Neil Patel. 3 reasons to buy PayPal stock like there's no tomorrow. 2 of the 3 that I do very much agree with. The first one being PayPal's financial position. They talk a little bit about PayPal's balance sheet. So if you come over to the numbers, on a balance sheet basis, and we're looking at the last, let's say, quarterly numbers, 4 quarters. If you come over to total cash versus, let's say, long-term debt for the business, there isn't really a long-term debt. So this right here is where we are, with the total cash sitting well over $14 billion, with total debt sitting at just under $10 billion. And this is also going to be on the balance sheet here. As you can see, long-term investments of 4.6 billion, cash and cash equivalents, and short-term investments of 7.7 and 5.9 billion. So all in all, we're talking about 17, almost $18 billion worth of cash, short-term investments, and long-term investments, with long-term debt sitting at under $10 billion. So Alex Chris has really enhanced the overall positioning of the company's balance sheet here, with debt levels staying stagnant and where they are, and cash and short-term and long-term investments increasing for the business as well. So we've got almost twice as much cash as the debt on the balance sheet. So very, very strong financial positioning. The second reason being the stock is very cheap, that I also agree with. I think it's trading at very, very attractive to low valuations. If you come over to ratios, you'll notice that PayPal continues to trade at a really, really low 13, 14 times price to earnings multiple, at just under 2 times sales. So it continues to trade at a really, really cheap valuation relative to what we were used to seeing from a company like PayPal. And the third one was, of course, PayPal's competitive strengths. Now, it does have an economic moat with regards to its networking effects and the amount of merchants and consumers it has, and the amount of data that it can collect, and again, implement artificial intelligence to make the data more useful, and again, create that networking effect for all of the people involved in the ecosystem. But of course, they do have some competitive threats as well with regards to Google Pay, Amazon Pay, Apple Pay, as they continue to affect PayPal's economic moat. But that is still yet to be seen in the numbers. Like, one of the things that I've mentioned in my previous videos is that everything that we talk about for every company is sooner or later going to make its way over to the numbers, right? If the company is expected to do really well, that's going to show up in the numbers. If the company is expected to do really bad, or if there is going to be any type of a threat from other companies, it's also going to show up in the numbers. Everything is going to show up in the numbers, right? So that's one of the things about PayPal is regardless of what you might think about the competitive threats to the company, the numbers are still growing. The numbers are still doing really well. I mean, we're still seeing, 8, 10, 12, 15% growth. That is still respectable growth for PayPal. And if you come over to Analyzer, if you simply just do an autofill feature for the Analyzer here for PayPal, and let's just grow the company at a very modest single digits, right? 8 to 9%, because that is going to be somewhat aligned with what analysts are also expecting for PayPal. They're a little bit more optimistic, somewhere between 13 to 14%. But let's just say that we go with around 10% for growth for PayPal. 10% growth here, give them a P multiple, let's say 16. And if you hit calculate, we're only looking at PayPal at $58 as the fair value, exactly where it's trading at the moment. If you go just a slightly higher growth rate and slightly higher P multiple of 18, and now all of a sudden PayPal is incredibly undervalued by 21%, with a fair value sitting at $71 and a future price target of just under $140 per share. So again, you can use this platform, do your own analysis, take a look at this sensitivity grid and matrix to figure out what's the intrinsic value, where do you believe for individual stocks, what's the fair value for each and every company there. But PayPal here, of course, pushing up a little bit over 5% pre-market, trading back up to almost $62 a share on the back of what I believe to be a very strong earnings report. I'll listen in on the earnings call to see what Alex Chris has to say. But overall, I'm kind of pleased with what the company reported, up almost 6% now, trading over $62.45. And this right here is going to be the entire technical breakdown with the next resistance and a very, very important area of resistance. And target's going to be sitting roughly at $68. It needs to kind of break out of that supply in order for us to see higher highs all the way up to $76, $77. And support level is going to stay put at $57 per share for PayPal. So a lot of consolidation sideways. Again, we'll see if it actually eventually recovers all the way back up to post $100 or 110, 120s. But that's going to be the analysis for PayPal. Very pleased with the earnings, and I'm still going to be holding on to my shares. We'll see if I can actually sell some cash to good puts or buy some more. But for the meantime, again, very strong numbers coming in from PayPal's earnings. Let me know your thoughts and what do you make of these earnings report. We'll be listening in on the earnings call as well. So always make sure that you drop a like and subscribe to the channel if you're just joining us for the first time. By the way, I didn't show you guys the technical breakdown here. So this is the technical support. Support level, like I said, is going to stay put at $56, $57 a share. Resistance all the way up to $65 for the company. Again, a lot of consolidation sideways and a huge area of supply and a resistance that it needs to gobble up at around $68 per share. So that right there is going to be that level to keep in mind. So here we are, PayPal pushing up almost 6% now, $62 per share. Let me know your thoughts down in the comment section below. And this right here is going to be that sensitivity grid, which you can also take a look at on our MoneyVest platform and do the analysis for a lot of individual stocks on your own. There is a 51% discount available until the end of this month. As always, happy investing. I'll see you all in the next video.